Good morning, everyone. Welcome to the official YouTube channel of Adda 24/7 and regulatory bodies. My name is Amanjot, and today this is our 27th class related to principles and practices of banking. So, before starting the session, let me know, am I audible to all of you, and the PPT is also visible? Good morning, Prajakta. Good morning, Gitanjali. Good morning, Sindhu. Good morning, Murli. Good morning, Sneha. So, let me know, is everything okay? Are we good to go? Audio, video, both are okay? Everything is okay? So let's start. First of all, those candidates who are new to the channel, do subscribe the channel Officers Adda 24/7 and press the bell icon so that you will be notified about all the upcoming sessions on Officers Adda 24/7. And if you have not downloaded the Adda 24/7 application yet, then do download the application. You will get certain questions or practice questions here to practice your paper. Okay. So let's start with the first question that is related to the Banking Codes and Standard Board of India, that is BCSBI. I know you all have heard about the Banking Codes and Standard Board of India. So question is asking that Banking Codes and Standard Board of India has been set up recommendation of Committee on Procedure and Performance Audit on the Public Service headed by. So when we were establishing the Banking Codes and Standard Board of India, so the recommendation was given by the Committee on Procedure and Performance Audit on Public Services, and this committee was headed by which of the following person? It was headed by Usha Thorat panel, it was headed by Nachiket Moore panel, it was headed by SS Tarapur panel or Rangrajan panel. So which of the following is the head of the committee? A, B, C or D? Gitanjali saying C, Prajakta is also saying C. Okay, what about rest? If we are talking about Banking Codes and Standard Board of India, there is one recent information related to Banking Code and Standard Boards of India, is that now this is on the stage of dissolution. The Banking Codes and Standard Board of India is now going to be dissolved. So if a customer now have a certain problem, then the customer can go to the bank branch. The customer have to go to its own home branch of a bank, and if the home branch is not helping with the problems of the customer, then the customer can go to the banking ombudsman. But now the Banking Codes and Standard Board of India, since 2011 November, it is at the stage of dissolution. Okay, so do remember this, that BCSBI is not working, is not operational right now since November 2021. If a customer is facing certain issues, if a customer is facing certain problem that whatever promised by the bank is not compiled by the bank, then the customer can go to the home branch, or customer can do the complaint at the home branch, or can go to the banking ombudsman. Okay, so everyone is going with the C option. Very good, that is correct. SS Tarapur committee was the committee which started or which recommended for formulation of the Banking Codes and Standard Board of India. Now do remember the latest update that runs November 2021. Banking Code and Standard Board of India is at the situation of dissolution. Okay, it is at the stage of dissolution. So you can't go to the BCSBI. Now you have to go to the home branch, and if the home branch is not providing you the solution, then you can go to the banking ombudsman. Okay, now second question. In the case of non-payment of invoices by customer, the factor will recover the amount advanced from the client. It is known as. So we are talking about the factoring. Factoring is the process, or we can say alternate source of finance. Factoring is the method of alternate source of finance. When a person requires certain capital and he or she is not able to take from the commercial bank, then they can go to the alternate source of finance facility, which of the in which the factoring is one of the alternate source of finance, in which factor will always remain the bank or financial institution. Who will be the factor? Factor will be the bank or financial institution every time. And what happens in the factoring? There are two persons. One is buyer and second is seller. Okay, they are doing their trade, they are exchanging the goods and services in comparison to payment, and there comes the factor. The factor will be your bank or it can be a financial institution. Now let's say, for example, the seller has sent the goods to the buyer. The seller had sent goods to the buyer. Now buyer has given a certain promissory note to the seller, in which buyer had said that I am going to pay you the amount of the goods on 28th of May. So seller has exchanged the goods in comparison to promissory note. Seller has sent the goods on the date of 10th of May, for example, but the buyer is saying I am going to pay you for these goods and services at 28th of May. Now if a seller requires an immediate cash or requires an immediate payment, what seller can do in the third stage? Seller will go to the factor, it can be bank, it can be a financial institution, and give the promissory note to the factor, and the factor will provide the immediate cash or payment to the seller on discount. The factor is not going to give you the 100% amount, but the 75 to 80% amount will be discounted by the factor or bank. And after, when the due dates come, this factor will go to the buyer by taking the promissory note with itself and for asking the payment, asking about the payment on the due date. It means on the 28th of May, factor will go to the buyer and ask that you have to do this payment, you have to give the payment of this particular bill, and then the buyer will have to do the payment to the bank or to the factor. Now this is the process of factoring. Now this is overall factoring when two persons are performing exchange of goods and services, or two persons are performing trade. In that situation, there will be, if the buyer is not giving you the immediate payment and you required immediate payment, what you can go to the bank, you can take that invoice, that bill to the bank, and bank will discount that particular invoice for you on a discount value. And now why bank is doing so? Because bank is getting a certain fee or commission from the seller, because seller is discounting the bill from the bank, so seller have to pay a certain fee or the charge to the factor or to the bank. Okay, now in case, let's say for example, in the fifth stage, here in the fifth stage, when bank go to the buyer and ask for the payment, and let's say buyer defaults, buyer is saying I am not going to pay, and buyer defaults. In that situation, the bank will recover the money from the seller. And what type of factoring it is? It is a recourse factoring. Very good. Everyone is going with the A option, that is correct. It is recourse factoring. Okay, so when default has been done by the buyer, then the bank will get money back from the seller, which he has given as the advance. That is known as recourse factoring. But when it comes to the non-recourse factoring, seller do not have to repay the amount which he has get in the advance payment of bill of discounting, because in that situation the bank will charge a higher commission and bank have to face the loss. In case of non-recourse factoring, seller do not have to pay the any amount. Okay, so right answer will be your A, that is recourse factoring. Now, similarly, forfeiting is also working. The function, or we can say the mechanism of forfeiting is also same. The only difference is here that in comparison to buyer, we will write here importer, and at place of seller there will be an exporter, and in place of factor there will be a forfeiter. Okay, this is the only difference in the factoring and forfeiting. Factoring works at the national level, but forfeiting works at the international level. So the only difference will be, in comparison to buyer and seller, we will have exporter and importer, and at the place of factor we will have forfeiter, which is already a bank or financial institution. Okay, so now next is third question. Mutual fund scheme redemption can take place only after the period of the scheme is over. Now, however, closed-ended funds are listed on the stock exchanges and investors can buy, sell units in the secondary market. It is known as, which type of mutual fund service scheme is it, in which redemption can only take place after the period of a scheme is over? After the duration has over, only you can redeem your mutual funds. Now, which of the type is it? Is it a open-handed? Is it a closed-handed? Is it a equity funds? Is it a funds of funds? So which of the following is right? Gitanjali saying B, but saying B, Prajakta saying B, okay, Ananta saying B, everyone is going with the B option. That is correct. Right answer will be your close-ended funds, because in the close-ended the maturity or the duration will be already decided, or after that duration ends only then we can redeem our mutual fund scheme. But in open-ended you can redeem whenever you want, but in closed-ended you have to redeem after a specific period of time has been ended. Okay, right answer will be B. Next, which of the following is not a money market instrument? Which of the following is not a money market instrument? Achha, if we are talking about the mutual funds are simply professionally managed funds in which funds are collected from many investors and invested in diversified sector to minimize the risk. So if we are asking about what is mutual funds simply are professionally managed funds by the professional managers who know where is the risk and where is less risk, where is high risk, and they collect funds from many investors and they invest that pool of funds which they have collected from many investors in the diversified sector, in the different sector, in shares, bond, debenture, real estate, or any other financial instrument to minimize the risk of loss. Okay, that is mutual fund. Now let me know what will be the answer of the fourth question, as it is asking which of the following is not a money market instrument. First is saying your cash management bill, second saying commercial bills, third is saying your collateralized borrowing and lending obligation, and fourth is saying gold bullion. Which of the following is not a money market instrument? Everyone is going with the D option. Is gold bullion. Very good. So right answer will be gold bullion. CMB cash management bills are the part of money market. Collateralized borrowing and lending obligation was a part of money market, and your commercial bills also a part of money market. Right answer will be D. So money market is regulated by Reserve Bank of India. It is a short-term market in which for less than 1 year securities will be exchanged, and there are short-term financial assets which are close substitute of money can be exchanged at the time of collecting funds or fulfilling your requirement of the funds. Okay, so money market regulated by RBI. It is also known as short-term market. In money market, short-term financial assets are used to exchange the funds which are close substitute of money. It can be call money, notice money, term money, cash management bill, commercial bill, CBLO, etc. Treasury bills is also a part of the money market. Okay, now next question is, who manages government debts in India? Which of the following manages the government debt in India? Is it SEBI, is it Finance Ministry, is it RBI, or is it banks? Which of the following statement is correct regarding the debt management of Government of India? Now, first of all, those candidates who are live in the session, do like the session and also do share the session with your friends and colleagues who are preparing for JAIIB exam. Okay. So what will be the right answer for the fifth question? Okay, everyone is going with the C option. Naimurli is saying B, that is Finance Ministry. Okay, the rest are going with the C option. So RBI is an agent of Government of India. RBI works as an agent of Government of India. We have already studied the function of RBI, which is banker to the Government of India. So RBI performs all the activities on behalf of government. If government requires a certain loan, if government requires to balance its mismatch of revenue and expenditure, then government takes loan from the Reserve Bank of India. The financial or we can say the revenue of Government of India, the funds of Government of India is managed by Reserve Bank of India in its public debt office. Okay, and whenever government requires certain capital from the market by issuing government security, the selling and purchasing of government security will be done by Reserve Bank of India. So RBI works as an agent for Government of India, and also whatever debts government is taking will be managed by Reserve Bank of India. Acha, RBI gives loan to Government of India. RBI gives loan to Government of India on two types of rates. First is bank rate, in which RBI gives loan to Government of India for long-term period, which is more than 3 months. And second is WMA. WMA stands for Ways and Means Advances, in which RBI is giving loan to the Government of India for the short-term period. And the rate of interest which is charged at the time of Ways and Means Advances, it is repo rate. So the rate of interest RBI charged from Government of India at the time of giving Ways and Means Advances loan, it is repo rate. And another is bank rate, in which RBI giving loan to the Government of India for long-term period for more than 3 months. Okay, so these are the rates on which Government of India can take loan from RBI at the time of mismatch of the revenue and expenditures of government. Okay, so right answer will be your C option. Next, when banks have business relationship with the industrial and business entities, this is part of which type of banking? So simply we are saying that bank is providing services, banking is providing banking services and product to the industrialist, to the business entities. Now which type of banking is it? Is it a universal banking? Is it a international banking? Is it a wholesale banking, or is it a retail banking? Which of the following will be correct answer? A, B, C or D? Sixth is C and D. We are getting two options, C and D. D option is retail banking. Okay, D option is your retail banking. So when we are talking about the business entities, we are talking about the industrialist. Now this is very simple. It is a wholesale banking. So what is retail banking? When the individuals are performing the banking activities, it will be known as retail banking. But when the corporates, when the business entities performing banking services, it will be known as your wholesale banking. International banking is cross-border transaction. International banking is cross-border transactions. Universal banking, all kinds of activities, all kinds of facilities will be available under one roof. Under one roof. That is known as universal banking. So in universal banking, you are getting all kinds of banking facility, investment facilities under a single roof. That is known as universal banking. International banking is the banking in which the cross-border transactions are happening. Wholesale banking, when the corporates or business entities perform the banking services. Or retail banking, when an individual is performing the banking services. The right answer will be your C option. Now, in letter of credit, there is a provisions of repeated negotiation of documents subject to payment a previously negotiated document by the applicant. It is called a transferable LC, a green clause LC, a red clause LC, or revolving LC. So simply we are saying in the letter of credit, we have a provision that the negotiation will be done repeatedly, okay, between the many parties. Now which type of LC is it? A, B, C or D? D option is revolving LC. Okay, which of the following is correct? Okay, everyone is going with the D option. That is revolving LC. Okay, very good. So now we can understand by the name also that what we are doing here, we are repeating the negotiation of the LC. It means we are doing the payment to the many parties. Now it will be revolving LC. Okay, it will be revolving. Not transferable. Transferable LCs you are negotiating with the one person, but we are saying we are negotiating it is multiple times, then it will be revolving. Okay, so right answer will be revolving LC, D option. Next, when credit risk arises on account of restrictions imposed by the government of another country, it takes which of the following forms of credit risk? So first of all, there are many risks which a bank is exposed to. Here we are asking that when a credit risk arises in a bank, account of restrictions which are because of account of restriction which was imposed by the government of another country. Now it takes which of the form of the credit risk? Is it a direct lending? Is it a treasury operations? Is it a cross-border exposure? Is it any of the above? Now, which type of credit risk it is when the restrictions was imposed by the government of another country? Very good. Right answer will be your C, that is called cross-border exposures. Correct. Right answer will be C. Now, what is credit risk? Credit risk is also known as default risk. And when we are talking about the credit risk, it's a type of risk in which the customer defaults, in which the customer do not pay the loan of the bank, do not pay the installment of the bank, then it will be known as your credit risk, also known as default risk. When the borrower of a bank defaults, it is known as credit risk. Okay. Right answer will be C, that is cross-border exposure. Next, digital banking is characterized by. Now, next question is related to the digital banking is characterized by. The first option is saying visiting branch office for doing transaction and using digital devices available at the branch. Second is saying use of computers and core banking solution by the banks for effective customer services. Third is saying alternate electronic channel which can be used by customer at their convenience to carry out the banking operations. Fourth is saying use of electronic ledgers and digital tools for book maintenance and transactions by the books. So which of the following is correct or is the characteristics of a digital banking? A, B, C or D? Ninth is C. Okay. Everyone is going with the C option. Correct. That is true. That whenever we are talking about the digital banking, it is the alternative electronic channel which can be used by the customer at their convenience to carry out the banking operation. Okay, or what is virtual banking? Acha, what is the difference between digital banking and virtual banking? Let me know what is the difference between digital banking and virtual banking. So digital banking is the type of banking in which a customer can use certain electronic channels at their own convenience whenever they are required to perform the banking operations. Okay, now what is virtual banking? Isn't it both the same? Virtual banking and your digital banking, both are same or not? Let me know. If you do not know the difference, then let me know that we do not know, so that we will discuss the difference and we will move forward. Okay. Difference between the virtual banking and digital. Both are not same. Then what is the difference? See, virtual banking is simply the type of banking in which a customer do not have to go to the bank branch. So without visiting a bank branch, when a customer is capable of carrying out the banking services, that is known as your virtual banking. Okay, whenever we are talking about the virtual banking, what is virtual banking? Simply in which a customer do not have to visit the bank branch, and when a customer is capable of carrying out the banking services without visiting a bank branch is known as virtual banking. And how many methods are there that by which a bank do not have to visit the bank branch but can operate the functions? So we can simply say that the type of the virtual banking can be your digital banking, it can be your online banking. In online banking, you do not have to visit the bank branch. Second, it can be your mobile banking. Third, it can be your ATM services, etc. So this is the virtual banking in which a customer do not have to visit the bank branch but still can carry out the banking functions with the help of online banking, mobile banking or ATMs. Also, we can say digital banking is a type of virtual banking in which a customer do not have to visit the bank branch. Okay, clear the difference between both? So mobile banking, internet banking, ATM services, what we are using. Let's say, for example, I want to deposit money in a bank. I do not have to go to the visit the bank. I can go to the cash deposit money. I can deposit money from there. If I want to transfer money to any other person, I do not have to go to the bank and fill the form and then I will transfer the money to another person. I can simply use my internet banking. I can simply use my mobile application and I can transfer the money. If I want to withdraw the money, I do not have to go to the bank branch and fill the withdrawal form and then collect the money. I can go to the ATM and I can withdraw money from there. So all these activities are virtual banking when the customer do not have to visit the bank branch but still can carry out the banking functions. Okay. Now next. Yes, digital banking is one of the type of the virtual banking. Correct. Next. The Basel Committee on Banking Supervision, that is BCBS, Basel Committee on Banking Supervision, was constituted by. So first of all, Basel Committee on Banking Supervision was started or was formalized because of the international banking regulations. So Basel Committee on Banking Supervision provides a certain regulations which are related to the international banking. So international banking regulations will be given by the Basel Committee on Banking Supervision, whose secretariat is located at BIS in Basel, Switzerland. It has given us certain 3 Basel Accords, Basel Accord 1, 2 and 3, by which the international banking regulations are maintained by the committee. Okay, now who constituted this committee? First is saying Governor of Central Bank of European countries. Second is saying Governor of Central Banks of Group of the 10 countries. Third is saying Governor of Federal Reserves of USA. Fourth is saying Governor of Federal Reserve of USA and Governor of Bank of England. So who constituted this Basel Committee on Banking Supervision? Everyone is going with the B option. Very good. There were 10 countries who started or formalized the Basel Committee on Banking Supervision. Okay. So correct answer will be your B option, that is Governor of 10 central banks of group of 10 countries. Very good. Acha, how many pillars are there in the Basel 2? How many pillars are there in the Basel 2? Also, let me know how many questions you have done correct. There are 3 pillars. Okay, what are the names of the pillars? Not 4 pillars, there are 3 pillars only. What are the names of the pillars? In Basel 2, when we are talking about the pillar, there are 3 pillars. Now, what are the names of the pillars? Okay. Next one, information for all of you. As you know that there are English medium batch and bilingual batches already running on Adda 24/7 application. So there are certain selection batch and case study batch we are launching again for the JAIIB June exam. So these are the already batches which are running, that is your June target batch, June July target batches. Now there is one selection batch which is coming. Okay, and in this selection batch, this batch is starting from 20th of May, in which we will have a certain kind of crash course. Okay, it is a kind of crash course in which we are going to discuss the only important modules, and we are going to practice certain MCQ. So this is a selection batch, and also there are case study batches available for your practice. So if we are talking about the case study batches are also starting. In the bi-language batch, it is starting from the 27th of May. And if we are talking about only PPB case study batch, now this is starting from the 30th of May, and the combined JAIIB case study batch is starting from the 30th of May. So these are the recent batches which are coming on Adda 24/7 application, which are related to the crash course as well as case study batches for you, all of you. Okay, so the three pillars are very good: minimum capital requirement, second is supervisory review process, and third is market discipline. Okay, very good. These are the three pillars of Basel 2. Now, yeah, correct. Now, how to enroll in this particular batch? You can go one of the batch in which you want to enroll, and go to the batch and do check the study plan which is provided here for all the subjects. The study plans is available, and you can check a study plan, and you can go to the view offer. When you go to the view offer, the prices are little high here, but you can use a code that is Y496. If you use this code, you will get 77% discount on this particular product. Y49. You will get 77% discount on this particular product, and to get 1% additional discount, you can purchase this particular batch from Adda 24/7 application. You will get 78% discount on that. Okay, so do remember, from 27th of May and 30th of May, we are starting the selection batch, which is a case study batch, which is a crash course batch, and we are also starting a case study batch in which only the case study MCQs will be practiced. Okay, so these are the recent batch which is coming and which are important for your JAIIB preparation. And if you want to enroll in this particular batch, do visit the Adda 24/7 application. Okay, so that's all for today. Thank you all for joining.